Hello guys, welcome back to another lovely trading video. In today's video we're going to be doing an in-depth stock analysis on Peloton, ticker PTON, because it is down around 35% today. Also we are going to do one on Moderna after this, so if you want to check that out as well. So firstly, we always start off on the daily chart so we can quickly see is there any gaps that need to be filled, because more likely than not the gap will get filled. And so they're usually good targets to use, especially if they're clear gaps. And what do I mean by clear gaps? For example, the one made today, we went gap down from around $85.80 all the way down to $60. So if Peloton comes back to this level, that is most likely going to be a reaction level. Then, is there any other gaps? Really, there's not any other clear gaps that are standing out to me. So for right now, that's the only target we'll kind of have to the upside where we expect to see significant levels. Now, going on to flexible group, we can then see our standard deviations, and standard deviations are how we get the majority of our support and resistance lines. And looking at Peloton, we can see it sold off so heavily today that it's come into the third deviation on the 4 hour. And when you see a stock, especially a large cap stock such as Peloton, come down to that green deviation, which would be our third, more likely than not, we will get some buying pressure coming in at this level, and we expect to see somewhat of a bounce. But the only thing you do have to take in mind is this is happening off bad earnings, and that there's not going to be as much demand for home gym equipment. So obviously that is why Peloton has been so strong over the past 2 or so years, and maybe a reason we won't see it go back to all-time highs. So that's the only risk you are taking, obviously buying it long, is that it is off somewhat of fundamentals. But like most things in the market, you tend to see overreactions when you get a set of newses. So yes, it will probably bounce back above $60, but it doesn't mean it has to. So yes, this would be a low risk, but just take that into mind, obviously, depending on how you trade. If day trading may not matter as much, but if you're looking for swing trades, do take into mind that it is of a fundamental reason and not just a just kind of random price movement. So we obviously have our low risk buy entry kind of where we are at now at around $57, and then we do have another one coming down to at $53.50. And that's where our second deviation on the daily. So we expect to see a bounce within this area here, kind of within this $4 range. We expect to see buying pressure come in and see at least a pullback to say at least $63 is kind of where we would see the minimum of a pullback that we would be looking for. But we'll be looking for closer to around $70 to $74. Reason for that is the second deviation on the 4 hour and the first deviation on the daily. Because for targets, you usually look for the next whole deviation, because that tends to be where the stock will move. But if you're looking for some sort of confirmation, you're probably going to be looking for a close or a hold above $57. And if it continues even lower, our kind of bottom price target, or the lowest we would be looking to buy based off support levels, would be around $33.30. So these are our buy zones, and if we're getting long at these levels, where are we looking to get or lock in profits, or maybe even get short? So locking in profits, obviously if we're getting in at this $50 mark, it would make sense to be looking at least some profits at these the first deviation and second deviation. Reason for that is if it's going to continue down to a downtrend, it's going to most likely pull back to this level before continuing down. So that's why I always lock in at least some profits at these levels, even if we expect it to go a bit higher. But if it breaks through this level and continues up, we'll look to lock in some more at $83 or around that. And again, that's kind of where I would be looking to get them out of the majority of the size, for the reason being it's gap down on fundamentals and the deviations are also trending down. So what that basically means is if you are long, your profit margin is kind of getting smaller by the day. So it makes more sense to kind of just get out the trade at a level where it's most likely going to reach but won't take forever to get to, and that will most likely be that $83 level, and you could push it that bit further to around $85, which would be the gap fill. yes, it could continue higher, and if it does, you know, you got 93/95 as levels, and again 108. All you really need to be looking at these deviations, and these will all be levels that you could be looking to lock in profits or even get short. But for now, we're kind of at a area we would be looking to buy. Yeah, basically we are at a low risk buy entry. We can see as well, if we go over to a 1 minute chart, we don't actually have after hours on, so let me quickly throw that on. It looks like it's continuing lower after hours by a tiny bit. It went down to around 55.15, so again we are looking for that bit push lower, down to 53.50, and that will kind of be where we would, if it's going to push lower, that's most likely the level we would see the buying pressure come in at the latest. So overall, I hope you enjoyed the breakdown on Peloton. I hope that helps to give you some insight on the stock and where we can see it going. So if you enjoyed the video, hopefully drop a like and subscribe, and that's it. Peace.